Hello, and welcome back to Explain the Charts. Today, May 25th, 2025, we're taking a look at USDCHF, combining both news analysis and chart data. First, let's quickly recap the latest news. Recent headlines indicate the Swiss franc has been experiencing safe haven demand, pushing USDCHF to a two-week low near 0.8200. Concerns regarding Trump's bill and its potential to increase U.S. debt are also weighing on the U.S. dollar, applying downward pressure on the pair. Additionally, there's talk of a long bond revolt pressuring the market. Let's see how this translates to the charts. Now, let's dive into the daily chart. Looking at the last several months, we see a period of relative consolidation after some heavy volatility, particularly in April where it dipped as low as 0.82. The price has bounced between 0.82 and 0.84 cents, unable to hold higher levels to retest previous resistance levels. Looking at the most recent candles, we can see a bearish candle opening near 0.825 and closing near 0.820, indicating continued downward pressure. The news of safe haven demand might be correlating to this recent bearish activity. Zooming in on the last few weeks on the 1-hour chart, we can gain better insight into where the price is now and where it's headed. The support at 0.8200 is evident, and the price has been consolidating around this level. A decisive break below the support could open the door to further downside, potentially targeting levels closer to 0.8150 or even 0.8100 in the short term. Switching to the 15-minute chart allows for even more granular detail. We can see the choppy price action from the past several days as the price fluctuates and struggles to remain above or below a price of 0.82. The price must break through support near 0.8200 and hold, or we could see it rise back to previous prices. It's clear that short-term traders are battling over these key levels, and we see indecision from both bull and bear traders, which is reflected in the price's consolidative pattern. So, what are the key levels to watch going forward? First off, that strong support level near 0.8200. A break below could signal a continuation of the bearish trend, possibly aiming for 0.8150. On the upside, a sustained move above 0.8250 could indicate renewed bullish momentum, potentially targeting 0.8300 in the medium term. Given the safe haven demand for the Swiss franc, coupled with concerns about U.S. debt, a short-term bearish scenario seems more probable, perhaps with a 60% likelihood. However, if risk sentiment improves and U.S. economic data surprises to the upside, we could see a bullish reversal, but the likelihood is somewhat lower, around 40%. Keep an eye on upcoming economic releases from both the U.S. and Switzerland, especially any news concerning Trump's bills. Also, monitor global risk sentiment. Any escalation in geopolitical tensions could further fuel safe haven flows into the Swiss franc. That's all for today's analysis on Explain the Charts. I hope that you found this insightful. Be sure to subscribe for more detailed chart breakdowns and market updates, and leave a comment if there's any instruments that you want me to analyze.